Hello and welcome to today's session. I'm Mikael Carlestal, account director at Dijk, Moody's Analytics company. I'm based in the Stockholm office, and today I'll be interviewing Pia Porvari and Jarno Saario from UPM in Finland on how they transformed the credit risk function to enable business growth. UPM is trading in 120 countries. UPM leads the forest-based bio industry into a sustainable, innovation-driven and exciting future across 6 business areas. They create renewable and responsible solutions that replace fossil-based materials by making the most of residues and side streams. So that's a very short introduction to UPM. And we have some great insights today from Pia, who has been leading the way within credit risk management at UPM for over 2 decades. Now director of customer operations and lead to cash in finance. She's also a member of the European Advisory Council of the Finance, Credit and International Business Association. Jarno brings great experience also to UPM with over 18 years in the field. He is currently credit director for UPM and leads the credit risk management team, which supports all UPM business areas globally. I hope I got that right for you both.
Thank you for having us. That's correct.
Yeah, welcome both of you, and thank you for joining us today and sharing your experiences today. We appreciate that.
Thank you, Michael.
Thank you. So the first question I have is if you can tell us a bit about what the credit risk function was like at UPM, going back maybe 5 or 10 years.
Yes, of course. So the starting point leading to the current setup was so that we had around 35 credit risk managers with teams of credit controllers in almost all of our sales offices. We also had several different credit insurance policies, which were either run from the producing mills or from the business or sales areas, so to speak. And in the next steps of our organizational development, we then moved to regional credit risk management setup, where we had around 5 regional teams in Europe, like Northern Europe, Central Europe, and so on, together with 3 teams in APAC and China, and 2 teams in North America. And then the next step that we took was to centralize to 1 team in Europe, and then we had 1 team for APAC China as well. The North America setup stayed the same. And then the credit limits as such were set with similar process, no matter what the size or the risk status of the buyer was. And the receivables and risk position was reported once a month at 1/10 time only. So that's how it really looked like in the past.
Okay, thank you for that background, Pia. And what was it that sparked, and what happened to spark the transformation to the point where you are today?
Okay, so the spark for the transformation actually already started from the last financial crisis in 2008 and 2009. So it was becoming really more and more evident that we need to be creating a model that gives our credit risk management function tools to manage the credit risk portfolio proactively rather than reactively with, for example, order blocks based on the credit limit exceedings, which we basically don't do at the moment at all. And we also needed to bring transparency to the customer's creditworthiness and to the changes in the customer portfolio. So we needed then to diversify not just the customers, but also the actions needed to be taken based on the outcome of the credit risk assessment. As the technologies and the services in this area have also greatly evolved during the last decade, I would say, this enabled the real on-time transparency to the credit risks. So we also wanted to make sure that the experts we now have in the credit risk management team then focus on the medium and high risk customers as a most part of their daily work. So this meant then naturally that we needed to transform the principles of the credit limit setting as well. And as said earlier, before the change, all the customers were really assessed with the same process. And we also used several service providers in the field, meaning that when it comes to the sourcing the financial data of the customers, and then that made it impossible to have a global standardized view on the customer portfolio. We didn't touch the principles of KYC, so know your customers as such in the credit limit setting, but we included different levels of assessment based on the size of the credit limit requirement. And our aim was really to provide standardized credit risk or credit risk assessment model where the output is a credit risk scoring for all our customers, which then give us the global portfolio view. And as Bureau van Dijk is providing, for example, the financial statement in standardized formats, which we needed to enable the process automation with our scorecard, we then engaged further development discussions with VVD team. It was also really, at that time, it was also very, very obvious to me that the credit risk management function would be able to do much more with less, as long as we fully utilize the new platform and the automation when we are developing the process.
Okay, thank you for that. So I think you touched upon it a bit more. Maybe you can elaborate a bit on it, how you changed the credit risk function over the years. I understand it wasn't from one day to another process. It took longer time than that, I understand.
Yes, absolutely. It took a longer time, and I kind of already touched base on this one. But for us, in UPM credit risk management, it has indeed kind of been a multi-step execution towards the current setup, where we have a globally centralized credit risk management function and a small high expert team. I would like to think that it goes hand in hand how UPM itself as a company has evolved over the past decade or so, as we currently have 6 different business areas in this our forest-based bioindustry portfolio. And whereas we used to have most of the customers in the paper industry sector, now the portfolio has widened to oil industry with biofuels and to chemicals industry with biochemicals and so on. So therefore, the kind of the steps that we have taken with the automation in the credit process and with the organization by establishing this globally centralized credit risk management function, they have really enabled our current ways of working together with our businesses. And I should mention also with the credit insurer to manage the customer portfolio very efficiently. We pulled together all the credit insurance policies as well over the years from the different setups I mentioned earlier. And currently we operate with one credit insurer under one master policy, but still reflecting some of the business portfolio specifics in these setups. And in this, of course, in the credit risk management process, when you use the credit insurance, it's obvious that you need to be compliant with the trade credit insurance policy rules and conditions. And for sure, Jarno and the team knows this very, very well. But about 3 years ago, when we concluded the credit risk transformation project, we achieved our target to automate the assessment process and to be also compliant with the insurance in this change. And it means a very close cooperation. And I think Jarno will for sure mention this as well, or talk more about this. But as an outcome, then we established an automated limit setting process, which is backed with our own scorecard, which is incorporated to One Dijk's credit catalyst. We then download the data to certain data elements to our own UPM analytics and reporting tools. We enrich it with UPM internal data like customer payment performance, collection segmentation, whatever you have there, to make a really transparent view on the customer. We enable the proactive credit risk management this way as well, and not only for the credit risk management team, but also to our sales and business management, so that there is then a common management of the customer portfolio.
Right, so an interesting journey. What would you say have been the biggest challenges during the journey?
Well, there's always challenges in the projects, aren't there? But I would really say that for me, it's having this experience with different kind of projects. The main challenge, for some reason or other, always seemed to be the change management. And in this particular project, I think that teams, especially in the business side, were so used to work with emails and Excel spreadsheets, and that's starting to use the kind of the self-service dashboards that we created for them. That was really met with some resistance, although the information on the customer was now up to date and available anytime you would access the dashboard. But it is all about changing your ways of working as well, isn't it? So we have now all our businesses, or the businesses have their own customer portfolio assessed by Jarno and the team in the standardized model. And it is easy to recognize, I would say it's easy to recognize still the deteriorating trends in financial performance of the customer. And of course, then also the financially sound and best performing customers. But this year, with this COVID-19 impact, it has definitely increased the need for this information. So I think we have also seen the usage of the dashboards now increasing, also on the businesses side of more. And then it has definitely proven the importance of the portfolio transparency.
Yes, thank you. Oh, sorry, a bit of an echo here, but I hope you can hear me. And your role has changed a bit over the years in this process, Pia, I know that, and Jarno is today looking into the credit management team. And Jarno, what would you say? How would you describe the credit risk function today at UPM as it is today?
Well, I have been now within the company a bit over a year, and I have to say that it's a really interesting journey that UPM has taken so far, and it has been really interesting to participate in during the last year or so. And as of today, we have a centralized function. Basically, we have 8 people working in credit risk management in Helsinki, UPM head office at the moment, as we also do have support from the customer operation in finance Shanghai team for the mainland China customers. But basically, at the moment, we have a really high level of expertise in the team. The analysts are in close cooperation with sales, with our customers, with the credit insurer. And overall, I think at the moment, what we are really looking into is to really utilizing all of this up-to-date data that we have to ensure that predictability, not only for the credit risk purposes as such, but as mentioned also to help our sales to focus on the right customers looking for the growth opportunities.
All right.
So basically, close cooperation with sales. At the moment, we have a rather different kind of operations, varying from rather short-term deliveries. Response times can be like 24 hours when we receive the orders, and then we have rather long-term contracts also with several customers. So we also need to ensure that we have that visibility in the long term, and the analysts are then working hard to go through all of the financials to predict the customer behavior and their sustainability in the long run. And that kind of a visibility, it is really crucial for sales also to plan ahead and be able then to not only to focus on the best customers and the most robust customers, but then also to be able to provide the best terms for those customers in the long run.
Okay, so visibility and transparency and the timeliness of the decisions from the credit department is enabling sales to find business growth, if I summarize it a bit. And is there anything else you want to mention, how you enable sales from a credit department?
Well, also what Pia briefly touched upon was the cooperation with our insurer. That has been also highly helpful for us, that we have a rather good support from the insurance company. And I guess I have to mention also that the team as such, they are able to underwrite a large portion of these insured limits as well. As this is a bit, I would say, perhaps a unique setup in that sense. But regarding these limit settings, then also working with Credit Catalyst, the information that we receive through external or our own systems, then that helps us also to automate large part, I would say more than 70% of the limit setting. So that enables then the team to focus on the most relevant cases and then also have those discussions with the sales as well as with our customers directly, that we also do have quite good cooperation with many of the customers, and especially during this year, the close cooperation with the customer has then provided us also plenty of insight into the short-term and long-term plans for our customers, how they are coping with the challenging times.
Right. Thank you, Jarno. I'm thinking also the transformation that you have done at UPM that leads to knowledge, of course. And what would you say from a personal point of view? What did you learn in the process? I mean, I'm thinking both professionally and maybe on a human knowledge terms. Would you be willing to share some learnings?
Well, maybe if I comment to that one first, for me, it is so that, in credit, we are working usually with, and in the past with number of different systems and processes, and there was a frequent kind of reactive interaction needed, kind of a firefighting and lots of paper documentation as such. So it was, for me, great to see the shift to the new way of working, supported by the new tools and automation, and the kind of the typical data entry, copy paste diminishing to quite minimum, and then having the highly skilled analyst really released to focus to the core of their competence. Of course, for me, it's great to see that the team is developing and people are performing really well. And but also then personally, as being charge of the lead to cash, it meant, of course, that we are now looking into achieving the same in all of our process areas under the UPM lead to cash finance. And then working with this great team of people that we have in UPM end-to-end, in the end-to-end process development and analytics and operations. So it gives us all, of course, kind of the endless opportunities to constantly challenge ourselves and improve. But it also means a lot of self-learning. You know, it's not something that somebody brings you on a silver plate. You know, you need to stay really up to date yourself on what's happening in your field. You know, what's happening with different solutions and platform and service providers. So a lot of collaboration around the field that you operate, I think, is always needed. But it's great also to have seen that as such the UPM strategy of being this data-driven company, that now I've learned that really we make better really formed decisions with data. So we improve our processes now with the data, and we bring really the business impact with data. So for me, you know, nowadays personally it feels like without data I'm just a person with an opinion, you know. But when you bring the data to the core of the things, then you can really create the impact as well. So that's how I feel it, how this really kind of a little bit widened my thinking as well, personally, to be honest.
Yeah, thank you, Pia. Thank you for sharing that. Jarno, do you have any input, any reflections on this?
Well, I have been now with the company a bit over a year, so I haven't seen the complete transformation process as such, but of course, on the other hand, we are still evolving, and there is plenty to do all the time. So from a learning perspective, I think it has been extremely interesting to see, first of all of the different business areas operating around the globe and working together also in that lead to cash sense that of course, these different countries, different geographical locations, they do bring quite a bit of complexity to the operations. But for me, it has been also rather interesting challenge as we need to keep up to date with different events ranging from trade wars and fluctuating currencies and varying demand in different businesses, not to forget the impacts of COVID-19 this year. And of course, it has been really interesting to see how UPM responds to those different customer needs. As mentioned, that we have some customers that are expecting the ready-made delivery within 24 hours from the placing the order, and then we have different customers that are committed to us in a really long term. So understanding these customers, their needs, and the whole operations, that has been really interesting. And I think also the way that the whole setup has been now set in UPM regarding getting that data into the company, analyzing it, and then also closely working with different stakeholders, meaning sales, customer service, collections, as well as the external, like Bureau and Dijk and our insurer, for example. Then I think that's a really interesting area to be involved with, at least for myself.
Good, thank you for sharing that, Jarno. So it's been a learning process up until the point where you are today. If we look a bit ahead and looking forward, what would you say you're looking for in the future? How would you like to see the credit department working in the future?
Well, I think we do have quite a bit of interesting challenges ahead of us. We do have new business areas like this biochemicals, for example, that we are now entering into. That will be an interesting challenge. But I guess coming back to that data and how we are then operating, I think in overall UPM is aiming for continuous improvement and improving our performance in the long run. And one of these initiatives supporting this has been becoming a data-driven company, as mentioned. So I think in credit management, we have taken several steps towards this direction by sourcing data from several points, internal data regarding order inflow or AR data and customer payment behavior and so on, and then combining with external data such as customer financials, country risks, and so on. And as of today, these are monitored actively, and but I do believe that we can do even more with the available data. And I think we do have already some initiatives for more predictive or let's say more responsive models to detect these relevant changes in due time to react to those. And in this regard, I believe machine learning, artificial intelligence, and these sort of tools can assist processing this data and can help our analysts to find the most relevant cases to focus on. And in a way, this abundance of data is one challenge, and we need to be more efficient in the future, focusing our resources on the relevant changes. But I believe there are plenty of possibilities to experiment with these new tools that are nowadays available.
Good, thank you. And Pia, is your picture of the future aligned with Jarno's, or is it totally different? What would you say?
Well, absolutely. I very much agree what Jarno is saying, but I was really also thinking what this COVID-19 crisis, how it impacted us, all of us, a lot, kind of businesses, the P and still is obviously, people, partners, and customers, and so on. It definitely has not been easy, but if we have learned something, I think it's also that we really cannot stand still as the change happens around us. We need to seize the opportunity that the change brings, and then I would say really more importantly to try to stay ahead of it, so and become more and more resilient. And for us, I think at UPM, it means really that we need to further accelerate the digital transformation. I think when looking back now, we did a big leap in the credit area, but we need this in all of the areas as well, because it's kind of nowadays, you know, if we think how we operate now, none of us thought that this would even be possible in the beginning of this year. So now we are hiring people without never meeting in person, you know, we are collaborating, we're training them on our systems and processes, you know, and managing the work and operations all remotely. And I'm referring kind of this experience that we had during the spring when we actually were in this situation that we were in the middle of establishing a new business hub in Wrocław, Poland, and you know we then couldn't travel anymore, so we had to come up of different way of doing things. So and then seizing the opportunities that so you have to see that no matter what the challenge is, you know, front of us, and you know now especially when we're talking about the credit risks as well, we just need to really kind of define the path forward. And I think I would say that how we do it is that we need to find the new or even better ways of working, and then create more resilient business models and processes that adapt to the really rapidly shifting needs. Because, you know, as we can see, the change can be really rapid now. We are all now experienced this black swan. So. And then we have different expectations nowadays from our customers. So we really need to be very agile and adaptive to these needs. And then, of course, to be able to, you know, kind of deliver on that, we will need to use more this digital technology to collaborate better and to automate and to connect. And I'm really thinking, in my opinion, the predictive analytics will become a core of our operations. And then, of course, all the cloud-based services and solutions, they provide the speed and the agility and innovation as well. But for me, still, I would say that if you, with all of these that the technology brings, it's absolutely great. But really, to be successful in the transformation, you must build on your business priorities. So talk to your businesses, listen to them, understand the business, and then build on your teams, on your people that who have really the industry knowledge, and they have the expertise on the business processes, and they understand the business processes, and they have the technology know-how as well. And that's how I see we are going forward.
Sounds great. And I'm sure with all the experience you have in the team on your side, I'm sure you're ready to take on any challenge coming up. So sounds like great plans, and can't wait to see the continuous journey for UPM. I'm excited to follow that. So yeah, Jarno, thank you for your time today, for providing great insights, sharing it with us, and the way you have transformed the credit risk function at UPM. Thank you very much.
Thank you, Mikael.
Thank you very much.
Thanks.